31st, 2022 for Canadian Mortgage Weekly, Canada's video weekly mortgage news podcast. And today we're talking about the 11 things that will not and doesn't affect your credit score. So Sam, let's get right into it today. Let's talk about the first thing. Out of the 11 things we have utility bills. You know what? A lot of the times, when I think about what affects your credit score, utility bills is one thing that I think would help your credit score. Wouldn't you think so?
Yeah, exactly. I mean, it's a payment that is required monthly. You want to stay up on all of these things, but it really doesn't affect your credit score, even if you miss a payment. I mean, of course, if you miss too many, if it ends up in collections, that's a different story, and we'd have to review it then. But in terms of improving or, hurting your credit score, it's actually not tracked on your credit bureau.
Yeah, not tracked at all. And that's really good to see because, I mean, you may have to pay a late fee or some interest charges, but, that one time you were late for missing your electric bill is not going to hurt you from getting that mortgage, at least, right? Mm-hmm. But the second thing out of the 11 things because we don't have all day to cover these items, but it's good to know them because you don't want to waste time on what's not going to affect your credit score, and that is property taxes. It's great to pay them on time. You avoid the late fees, but it's not really going to affect your credit score on a day-to-day basis.
Yeah, exactly. I mean, like you're saying, besides that late fee and an interest charge, it's not going to show up on your credit bureau. So you're safe there. If you maybe missed one, don't let it go too far. But yeah, it's not affected negatively.
Yeah, definitely don't let it go too far because then the city can inform you that you're way behind on payments. And then at that point in time, they do send a registered mail to make sure that you are up to date on that. And, they can actually go ahead and sell your home as well if you miss your payments for too long. But, at least it's not going to affect your credit score.
Yeah, that's right.
Yeah. The third thing on our list of 11 things today on Canadian Mortgage Weekly, things that don't affect your credit score, and that is home insurance. And Sam, that's another thing that it's a surprising item that doesn't affect your credit score.
Yeah, absolutely. I mean, they'll do a soft check when they're looking at, approving you for it. But again, if payments are on time, if they're late, none of that is tracked or registered on your credit bureau. So it's, again, not something that you have to worry about affecting your credit score.
You bet. And same for car insurance as well. I mean, it is something that is tracked internally with, the insurance companies and your insurance rating, but it's not necessarily going to affect your credit score. So that's number 4. And number 3 is car insurance and home insurance. So another form of insurance, Sam, on number 5 that doesn't affect your credit score is life insurance. And, that's something that I've never seen report to our credit bureau. And I've never even seen report in a positive way, in a negative way, so that doesn't actually affect your credit score either.
Yeah. And it looks like if you just, if you don't pay it, they'll just end up canceling your life insurance. So again, not a negative, but not necessarily the best scenario if it's a life insurance policy you've been paying into.
Exactly. Definitely not the best scenario. We don't recommend lapsing on your life insurance policy. That's not what we're saying here. It's just it's not going to affect your credit score exactly the way you may think it will. Another item, number 6 today, is rent. And that's a surprising item because a lot of people probably have thought, if I don't pay my rent on the 1st, it's going to report to my credit. But with a lot of landlords right now, a lot of them don't really can't afford the systems and the processes to report your score to a credit bureau on a monthly basis. There are some institutional landlords and landlords of the sort that do report your credit score, rent to your credit bureau. However, it's usually reported in the case where the landlord or property management company has damages and they've had to actually go through the tribunal to have that amount put on your credit bureau as a judgment, which in that would be put on your credit bureau. But in terms of a late payment of 1 or 2 days on your rent, it's probably not going to show up in your credit bureau.
Yeah, exactly. That's a good point. And even looking just at purchasing power and liabilities. We don't even calculate rent in as a liability. It's important to note what your rent is, but it also doesn't hurt you from, your qualification for a home purchase either.
Yes, that's right. So looking at number 7, we have age. So whether or not you're 30 or 40 or 50 years of age or 60, it doesn't really matter, right, Sam? That doesn't affect credit score either.
I mean, we've seen a lot of, you know, uh, advanced years clients that, maybe they're even still on pension, but they have great credit score. So it's not like, inactivity or age is a major factor in determining what your credit score is. We've seen some high scores for some older individuals.
Yeah, we have, exactly. Some in the range of 800, 900, absolutely, right?
Mhm.
So that's not going to affect your credit score. So if you are concerned that maybe you're too young or too old,
Mhm.
but you have good established credit, you still probably have good credit. Looking into the 8th item today of items that don't affect your credit score, that at one point or another, I believed every one of these items affected my credit score.
Mhm.
But number 8 is interest rate. So the current interest rate you have on your products, car loans, mortgage products, or lines of credit, that's not going to affect your credit score going forward.
Yeah, exactly. I think there's maybe a bit of confusion about this one because typically the better the rate that you have indicates, a stronger score. So in the initial factor to qualify for the rate, it might be important to have a good score. But once you have the rate, from that point forward, it doesn't really affect, whether your score is going to be impacted positively or negatively.
Yeah, exactly, Sam. So great points there. Number 9, 9 items so far is alimony and child support. So if you are in the fortunate situation that you need to pay or receive child support or alimony, then it's not going to affect your credit score whether or not that's paid on time.
Mhm.
Or if you're paying early, it's not going to show up as a positive to your score. The times when it does, though, show on your credit bureau is, when the Family Responsibility Office gets involved with the government because some paperwork has been filed that you've been late for such an amount of time. So in that case, it does get put on your credit bureau as a judgment. And Sam, as we've seen before, those judgments are taken pretty seriously by lenders. So
Yes, yeah, definitely don't want any judgments on your credit bureau at the time of, trying to secure a mortgage.
yeah, so don't recommend being late on your child support payments or alimony payments. Do make sure that you're on top of those, but know that if you are 1 day late or 2 days late or whatever that may be, it's not going to affect your credit score in a negative way.
Mhm.
Net worth. So number 10. So having millions of dollars in the bank, is that going to make your credit score better? I don't think so, actually, because it's payment history and the amount you're borrowing. Having the net worth doesn't really affect credit score. And Sam, I've seen some folks that have had some seriously high net worth, and their payment history has been in the dumps, and their credit score has not been great. And I've also seen some folks that have had great credit score, but have not a penny to their name. So,
Mhm.
it doesn't really affect your credit score.
Yeah, exactly. I think it's another one of those things where people may have an assumption that because they have a high net worth, that kind of overflows into all of their financial, areas. But yeah, exactly. We've seen lots of clients that, have very high net worth, have lots of nice cars, lots of income savings, but if they're not keeping up with their payments and, paying things on time, then they could still have a poor score.
Exactly. So yeah, don't focus on your net worth solely. Make sure you focus on your repayments as well. And then number 11, the last item that we have today on Canadian Mortgage Syndicate doesn't affect your credit score and probably isn't the only item, Sam. It's just these are the main 11 items. Probably our viewers here are thinking, what, there's a 12th item, and writing in the comments right now what the 12th item is. which we encourage definitely. But number 11 is checking your own score. And I know, Sam, I've done this for myself. I don't know if you've done it for yourself, but just checking your own score is going to give you a lot of insight, but it's a soft check and it doesn't affect your score.
Yeah, I mean, and it's a good way to stay on top of your credit. I mean, we're just capping off credit month with episode 70 here, and it's good to just know where your credit is at. So by making those self checks, the soft hits, it's a great way to know what your credit health is looking like, and if there's any room for improvement or ways that you can help increase your score.
Exactly. Absolutely. Well, thanks, Sam, for going through that list with me today. The 11 things that don't affect your credit score, just going over them all together here with everyone. Number 1, utility bills. 2, property taxes. 3, home insurance. 4, car insurance. 5, life insurance. 6, rent. 7, age. 8, interest rate. 9, alimony, child support. 10, net worth. And 11, checking your own score. Quite a bit of things. So definitely we are not, again, recommending you are late on this is not a video that you will show your banking institution. Hey, Joe Bladek and Sam Thompson say it's okay to be late on our rent today. And just know that it's not going to boost or lower your credit score. Could have other ramifications, however.
Yeah.
So getting into the next part of our show today, episode 70, big episode today, Sam, episode 70. It's a big deal.
Yeah.
We got some notable news items in the mortgage and housing world, specifically this new foreign buyers tax that has been introduced by the Ontario government.
Yeah, it looks like they've increased it. If you were looking before, it would have been a 15% foreign buyer tax, but it looks like they're increasing that to 20% now. And I think you had made an important note that that's not just limited to the GTA, that's across all of Ontario. So even in, maybe the softer markets where it's a higher demand for investment properties or a higher boom for investment properties, even those areas will be affected as well.
You bet, Sam. So call out there if you're looking to purchase a property in Ontario, Canada, any foreign investment, you'll need an extra 20% down on top of your additional down payment to pay for this foreign buyer's tax. It's a name to cool a housing market. I'm not sure how much of it in effect it's going to have, but we'll see how that stands to make out. Going forward, though, we also have this new Ontario housing initiative that has been released by our Ontario government, which is very interesting. It's their way of encouraging future housing growth.
Yeah, it'll be interesting to look into that a little bit further in a future video where we can look at, what the implications and the result of these initiatives should be, because I know, the broken record has been for the last while now that inventory is the major issue contributing to the surge in house prices and just availability that's not there. So it'll be interesting to see what sort of things this checks off the list and what kind of impact it'll have.
You bet, Sam. Yeah, I really do hope that the supply issue does get tackled with this initiative. I know on here at Canadian Mortgage Weekly we have been tackling that supply issue and on a consistent basis, so we hope our voices are being heard. That's great. So a future reaction video, stay tuned for that. Sam and I will make sure we go into depth on that. And also number 3, the other big news item is fixed rates have been soaring. So definitely get your pre-approvals in, get your rate holds in. It's something to consider when fixed rates are rising.
For sure.
Yeah. With that, Sam, let's get into our data that we go into here on Canadian Mortgage Weekly Live. Each week, we go into the housing and mortgage data that helps you as a consumer make informed purchase when you're buying your home, and an informed purchase with arranging your mortgage and picking a fixed and variable rate. So let's just launch into the 5-year bond yield today.
Yeah, absolutely. So as you can see in the graph, Probably the second broken record for what we've been reporting on lately is it is increased yet again. You can see that initial jump that we saw in March, where we, shattered the previous high of, what was it, about 1.8. We broke into 2%, and that felt, like quite a surge, but we haven't seen it stop there. We're, up closer to the 2.5% range, which has really, really pushed those 5-year fixed rates very, very high. I think we were chatting before today's video that, currently where the rates are sitting at, we haven't seen, rates this high for years.
Definitely for years, Sam. Yeah, you're right. We have seen a jump here on the bond yield that has translated to higher fixed mortgage rates. So much, the rates have been coming in almost weekly, daily, hourly at times from lenders. We have had lenders, sometimes changing rates in the middle of the day even.
Yeah.
So it's hard to manage that, especially when you're working with clients and they are having a hard time getting documents in, because in those moments, we really can't sometimes even get the mortgage locked in until we get all the documentation in place. So yeah, or a rate hold. So make sure that that's a game plan. But it's going to be interesting to see where the bond yield goes going forward. I do see it's starting to take a little bit of a dip just most recently. However, you're right. The rates have been highest since probably 2011. I haven't seen rates this high. So it'll be interesting to see what happens with the housing market going forward.
Yeah.
Let's move into the CDOR rate next year. That helps us determine whether or not a variable mortgage rate is a good deal for our customers. And in this case, the CDOR rate helps us with the variance as well, comparatively to prime. So the variance has gone up since last week, as we were talking about earlier, Sam. And the variance to prime is now under 2%. However, looking at all this data, it still seems that comparatively to the fixed rate, the variable is going to save a considerable amount of interest. So still a good deal if you can stomach the risk, really, at the end of the day.
Exactly. And I think that's kind of the position where a lot of home buyers are at the moment is, looking at where the variable is now, which is still considerably lower than today's 5-year fixed. But again, joining and signing up for a variable rate with at least an assumption or a strong feeling that the rates are going to be rising, even for the variable side. So it does look like it is a good option still, given the variance from prime. But again, it's a decision that is tightly linked with the Bank of Canada rate announcement, which is coming up in just a few weeks. Joe, we'll see if we'll see another overnight interest rate increase. They had jumped up on the last announcement by 0.25%, which was the first time, I think, since almost 3.5 years that they increased the rate. So join us. It's not next Wednesday, but the following one. And we're going to be there with our pre-rate show, going over, some of the lead up to this rate announcement.
Yeah, we'll have to make this a big pre-rate show this time around. And we'll have to time it a little bit, with the Bank of Canada rate announcement. So it comes out right on it. But we'll be looking forward to it. 13 days away. Stay tuned for that special episode. So that will be, let's see here. Today's the 31st. So we'll have episode 71. And then we'll have episode 72 for the pre-rate show. Yeah, that will be a good one. And a lot of movement on the rate predictions, because some are predicting a double rate hike, 2-quarter rate hike. Some are predicting a single quarter rate hike, and some are predicting a no rate hike. And, me having just renewed into a variable rate mortgage myself, I still think it's a worthwhile risk myself going into something like that, even if it's a double quarter rate hike, because going up 2 quarters is still going to put you lower than where the current fixed rates are.
Yeah, that's right.
Yeah. Anyway, call us, Sam or Joe or Taryn at the office for more details about how variable and fixed can affect you that way. But the next item here, national house price average. I love this graph. It's a very happy graph. It's going in the right direction for anyone that does own a house.
That's right. Yeah. If you own a house, you know, the last year and a bit has been an amazing time for you. Watching that, you know, equity in your home appreciate at very, very high and aggressive pacing. We had finished January last year up 21% year over year, just finished February up 20% year over year. As we're closing off March, I think we can likely expect the March statistics to come out in about 2 weeks or so. And we'll be able to track and see, you know, where the average house price can go from here. If it, you know, I don't imagine it'll get lower. I imagine it'll still increase, but we'll see if we maybe see a softening or if we hit a ceiling, because, you know, it seems like even when some people, you know, had predicted over COVID that the market was crashing or it was going to crash or we'd eventually hit a ceiling, it seems like that hasn't been true so far. So we'll have to see, you know, coming down the pipeline, where the house price is going to go from here, looking at March's statistics.
Absolutely. Yeah, it's going to be an interesting next month. I know we've seen a lot more listings, and we've had a lot of reports about, you know, prices changing a little bit in terms of where customers are expecting to sell their homes at. I've seen bidding wars turn into just really disappear altogether. And yeah, just because there's so many more listings available on the market, it's caused a little bit of a more selection, but also at the same time, as a home buyer, what I would probably do is, I saw at the time when I was buying a home, all these new listings come on the market, is I would take a step back and say, okay, all this new selection is popping up right now. Let's just wait another week. Let's just wait another week and just see what else comes on the market, because there's so many coming on the market. So, you know, as a home buyer, I could see myself doing that, and maybe there's a lot of people doing that. So it's going to be interesting to see what happens right now for the next few weeks.
Yeah, that's a good point.
Well, stay tuned on Canadian Mortgage Weekly Live, where we follow the statistic. And with that here, thanks Sam Thompson for all that great information. Sam Thompson, just to introduce him to all you viewers out there, is a mortgage professional in the Simcoe area, living in Barrie, Ontario, married, and also originally from Ottawa, Ontario. And Sam, always great to have you, part of the team now for over 2 years. You know, great to have your advice and also your contributions today. Yeah,
thanks so much for having me. It was a great episode 70. We brought a lot of great information and covered off those metrics. And yeah, for anybody who doesn't know Joe by now, Joe is a mortgage broker living up in Aurelia, servicing all of Ontario, in the industry over 11 years, a little more than 2. So it brings a lot of information and insight to these videos. So thanks so much for being on, and I'm excited for next week's video.
Yeah, next week's video is going to be a good one. Let's take a moment to talk about that. We've had a lot of excitement this first quarter of 2022. I'm sure that all the home buyers and folks that have been dealing with their mortgage process as well have had an interesting ride with the way the rates have been and just the housing market in general. So join Sam and I next week as we go through some of that in review, right, Sam?
Yeah, it'll be good to cover off. You know, it's been a very busy 3 months. It's hard to believe we're already into April, but it's been flying, and there's definitely no shortage of news to chat about. And we also will have a special guest on to give us a bit of a market insight and some updates in, you know, where he thinks the market's going to be. So we'll be joined by Andrew, the realtor. So that'll be great to have him on as well, and, you know, get to hear what he's been seeing in his market.
So yeah, he is a realtor down in the GTA, so he'll be a great perspective with the Toronto eye and what's happening down in the GTA, because usually it seems to radiate up into the Bay Area really area from that. So yeah, so thanks for joining us today. Again, March 31st, 2022 for episode 7 of Canadian Mortgage Weekly Live, Canada's video mortgage weekly news podcast with Sam Thompson and Joe Bladek. And feel free to like, comment, share, follow, and leave a question or a comment below, or send us a private message if you have some mortgage questions for us. We'd love to chat, set up a time for a mortgage consultation on any platform, and we'll talk to you all soon.